Hi, I'm Todd Mitchell, CEO and founder of Trading Concepts, and I want to spend a few minutes sharing with you one of my newest E-mini trading strategies. But before I jump into that, I just want to show you a quick trade that I just closed out. It's important you see this because unlike a lot of other trading educators, I trade for a living. Today, I made a quick $200 per contract, minus commissions on the very first trade of the day. Now, if you were trading 10 contracts, that's $2,000. 20 contracts, that's $4,000. So the point here is starting off small. You want to start off small, get your feet wet, feel comfortable, make money on a consistent basis with everything that we're showing you here, and then gradually build the amount of contracts, okay? Now, me personally, I trade a lot of contracts. But I want to relate to where you're coming from and how I would want you to start off trading with just one contract. So again, on this very first trade of the day, you would have made 4 points from 1938 and a quarter to 1942 and a quarter. You'd have made 4 points, which again comes to $200 per contract. Now, if you had traded 3 contracts, that comes to $600. And for a lot of people, being able to make an extra $200 to $600 a day can make a huge difference in their lives. And if you had continued to trade throughout the day, you would have made $261 per contract. Now, again, trading 10 contracts, that amounts to $2,610. Now, I want you to start off small, gradually build your confidence and consistency, then start to add the amount of contracts to your trading, okay? And this was just one day using the opening bell income strategy. It's only one of the many trading strategies that I teach. But the goal with this strategy is to profit within the first 90 minutes of the trading day with a minimum of 2-to-1 reward to risk. Of course, you can make a lot more money than that if you just use multiple contracts. But I don't advise you doing that until you master the strategy I'm about to show you. Now, if you go to my website, right, tradingconceptsinc.com, and click on testimonials, you'll see that I have a couple hundred testimonials listed there, and I have many, many more which my web team still is entering into the system. See, if you go to the website, I've got many, many video testimonials. You can scroll down and listen to traders just like you talk about what I've taught them. And I've got tons of audio testimonials right in here that you can listen to, and literally hundreds of written testimonials if you continue scrolling down this page, okay? And like I said earlier, I've got literally twice as many as what you're seeing right here, but we just haven't had time to enter them into the website. So let's go back here. And I want you to remember that these are real students, real traders like yourself. I've taught since 1994, okay? So some of them are regular traders just like you, and others are professional traders like fund managers and million-dollar market makers. One testimony I'm particularly proud of came from John Hill, the founder and CEO of Futures Truth magazine, who said, "What Todd teaches in his trading course has not only shown me a few different ways to view and analyze the markets, but he also teaches a good, reliable, and straightforward trading methodology that I feel anybody wanting to learn how to trade successfully could benefit from." Good job, Todd. Keep up the good work, he said. So I'm very proud of this one, okay? And I believe this is a big deal because I believe John Hill has evaluated more trading systems and methods than anyone else on the planet. You see, the reality is that a lot of people depend on me to keep them on the cutting edge of what's working in the market. And as a trader, you have one job and one job only, and that is to obtain and maintain a trading edge for consistent profits. Now, I've always taught people the most successful and predictable times of the day to trade are between 10 a.m. to 12 noon, and from 1 to roughly 3:15. That's it. Now, if you trade during those times, you can make a very good living. But take a look at what's happening here. If you see on this chart, this trade right in here, okay, the blue horizontal lines, those were the buys, and that occurred within the first 22 minutes of the trading day, okay? There were 2 trades in here, made $415, all right? And that's what I call early morning volatility. And for years, traders have tried to take advantage of this volatility but couldn't find a predictable or reliable way to make it work. That's why I always advise traders to stay away from it, because there was a mystery behind the strategy that was yet to be solved. In fact, taking advantage of the early morning volatility has been something that one of my top students, Craig Hill, and I have been quietly testing and researching for quite some time now. But it wasn't until a few months back that we finally figured out how to identify and profit from these high probability trading opportunities that set up shortly after the opening bell. Let me show you what we're talking about here. This first day, look down here, we made $370, just one contract, as you can see, selling it right here on the blue horizontal line and exiting here. That was all before the first half hour, okay? And then the second day, we made $378 in two trades, the first one being in the morning, as you can see up in here. Third day, we lost $117 on this trade right in here. And then the fourth day, we made $411, right? Three little trades, okay? And again, the important thing here is the payout ratio is 2.46, which means we're making roughly $2.50 to every $1 risk. And that's very important, and that's the key thing here. And then here, made $902 off of a few trades, okay, scaling in and the whole 9 yards. So look at, off of those 5 days, we netted out $1,944 in about 12 or 13 trades. So let me tell you this, if you only traded this one strategy, this strategy alone could make you a good living. From mid-April to the end of May, here's the real live proof. Over here you see the total net profit of $5,768, 53 trades in total. Okay, average trade was $109 per contract, and the payout ratio was at 1.93, which pretty much means it's almost a 2-to-1 reward to risk. And then you see here the chart to the left is the equity curve. Okay, and remember, these are real live trades. Now, here's the updated results from June 1st until June 26th, 2014, okay? Now, if you recall, you remember me talking about the total net profit of $5,768 here in the top left-hand corner, right, in 53 trades. Well, the updated results right in here, look at the total net profit, $7,813, close to a winning percentage of 67%, okay? Almost 70% accurate, and look at the payout ratio, 1.83, almost a 2-to-1 reward to risk. So in 19 trading days, that's $2,045 profit with only trading one contract. And you'll see here on the bottom left the updated equity curve as well. Okay, so like I said earlier, it's profitable roughly 70% of the time, with the average winner being twice as much as the average loss. That's right, for every 1 point we lose, we make an average of 2 or more. As you can see, this strategy allows us to make consistent profits and systematically build our accounts. By the way, this method works very well for small accounts too. Here's a photo of my family and I having ice cream together during the middle of the workday. You see, with the opening bell income strategy, you can book your profits in the morning and then spend the day doing whatever it is you want to do. I happen to like being with my family. Until we created the opening bell income strategy, this would have been impossible to do before 11 o'clock. And at a 69.8% accuracy rate, the odds are definitely in your favor. Not to mention the 2-to-1 reward to risk. Now, that's all well and good. Craig's now going to go into more detail about this strategy.
Thanks, Todd. On any given time frame, the markets are either trending or consolidating. For example, on a daily chart, a market may be trending. However, on the 60-minute chart, a market may be consolidating. The markets are fractal in nature and display similar price action on different time frames. When you're trying to determine whether or not the market is bullish or bearish, you really have to ask yourself on which time frame. Okay? Here's a great example. What may look like a bearish move on a 3-minute chart may actually only be a pullback into support and established uptrend on the 30-minute chart. Look at this chart. Okay? Your 30-minute chart is actually making higher highs and higher lows. Okay? Now, let's dive into this and let's look at just a portion here. This is just a pullback in here on this 30-minute chart. Okay? This is what it looks like on a 3-minute chart. It looks in here like the market is falling out of bed. Okay? We're making lower lows and lower highs. Okay? And on this day, as the market opened, you see the market started to catch a bid, pulled back, and then bounced off of major support in here. And then this was the low of the day, and the market continued to move up. Now, if you did not have the bigger picture and the contextual view of the market, chances are you were selling in here. Okay? Or, if you're a little bit more aggressive, you might have been selling in here. Pretty much selling the low of the day. Okay? That's why we always have to look at the larger time frame charts to get the big picture contextual view of the market. Here's what we use to determine who's in control of the markets during the trading day. Market internals. Since the price of a stock index can be influenced by a few large companies, even if the overall stock index components are not moving strongly in one direction or the other, we use market internals or market breadth to look under the hood of a stock index to gauge what the individual stocks that make up the index are doing to determine the true health of a move in price and to determine who's in control, the bulls or the bears. The market internals we use for the strategy are the advanced decline line and the NYSE tick. Okay? The advanced decline line is helpful when it diverges with the price of the stock index. For example, if the mini S&P is making new highs while the advanced decline line fails to make new highs, this is a warning sign that the stock index is being propped up by only a few heavily weighted stocks and that the overall stock index is not as strong as it appears in the price action. Here's a great example of what I just said. Look at this. As the price continues to move higher into our key trade zone, okay, what's going on in the S&P advanced decline line? It's actually making lower highs. Okay, so as this market's moving up, under the hood and internally, it's not as strong as it appears in the price action. As you can see, that ended up being the high of the day, and the rest of the day, the market actually, moved lower the rest of the day. And on the very next day, as this market consolidated and traded sideways in here and put in this marginal new low, you've got to ask yourself, well, are internals confirming? Let's look at them. If you look at the S&P advanced decline line, you can see in here that actually things are changing. And the bulls are actually coming in and showing a little strength, and this market is not as weak as it appears in the price action. And it is a marginal new low too. I mean, that whenever you have a marginal new higher new low, you've got to look at those internals to see what's going on. Very powerful. All right? That ended up being a low of the day. The market ended up trading up the rest of the day from there. Okay? So again, the advanced decline line is helpful when it diverges with the price of the stock index. Okay? The advanced decline line is also used in determining who's in control and or whether or not you should remain more neutral in your bias on the day. If the S&P advanced decline line is trading below plus 200 and above minus 200, around that zero line, then we will maintain a more neutral bias on the day and put more weight on other factors in helping to determine who's in control and what direction to focus our trades on, long or short. For example, other factors include the NYSE tick, the current trend, maturity of the trend, and where the market is trading relative to key trade zones. Okay? Most of you know about the NYSE tick. It shows us the overall sentiment, buying pressure, selling pressure in the stock market. Okay? It's helpful in telling us when the stock market is hitting sentiment extremes, indicating a strong breakout and or short-term exhaustion. In an uptrend, the NYSE tick will typically sustain lower extremes at minus 600 and upper extremes at or above 800. All right? Strong trending market will generally hold above minus 400. For example, here, strong uptrend, very shallow pullbacks. Notice it just pulls back in here. Okay, and then as we start to move sideways, and I'll get into this on the next slide, we got extreme tick reading. As we start to move sideways, the market, we got short-term exhaustion. You see the NYSE tick kind of start to pull back a little bit further. All right, same thing in a downtrend. Right in here, as this market breaks down out of this consolidation, okay, look at what we're doing. Look at the NYSE tick. It's pretty much holding. It pretty much maxes out about plus 400, plus 600 during these pullbacks in here. All right. After sustained directional move to the upside or downside, an extreme nicey tick at or above 1,000, for an uptrend, will typically indicate a breakout or short-term exhaustion. Well, after extended move is going to indicate short-term exhaustion. If the move is just beginning, breaking out of a consolidation, then obviously it's going to indicate a breakout. But here's a move. Here is an example of an extreme tick reading after a sustained move to the upside. Notice in here, after we got this extreme tick reading, the market ended up trading sideways the rest of the day for the most part. Okay. Another example over here to the right, after a sustained directional move to the downside, when we get those extreme tick readings right in here, typically you will see some short-term exhaustion, and actually the market ended up trading sideways, pulling back a little bit further, but then ended up pulling back inside, around this area and closing on the day right there. Now, right in here, this extreme tick reading is a breakout. We consolidated, and now we're getting that extreme reading to the downside. Okay, that's confirming the breakout. All right, so you can use it both ways. Again, you have to keep it in context. Yeah, guys, let's take a few minutes and look at some recent live trade examples. Okay, on this day, we had a total net profit of $415. Okay, as you can see, the market put in new highs. Okay, taking out the prior day high, market had actually pulled back into our key trading zone in here, and we actually scaled in the trade at 75.75 and 74.75 right in there. We took off a portion of the trade just ahead of resistance right in here at 77 3/4, and this market continued to move up, ended up exiting the trade completely just after lunch right in here as this market tested our major key trading zone. Okay, good trade. Next trade, back on May 15th, guys, we picked up another $370 right in here. Okay, as the market was an established downtrend, we actually broke. The market had gapped down below our major key trading zone in here, traded down through this gap, filled the gap, traded down through it, pulled back into that area where the gap fill was, which we also identified as a minor key trading zone. It was a great shorting opportunity. The internals were very bearish on this day. It was a great shorting opportunity. Okay, we got our 2-to-1 reward to risk right in here. Okay, good trade. Another quick $370. It was one contract too. And then back on May 8th, as you can see, shortly after, about an hour into the market, this trade, we ended up getting long in here as the market put in new highs. Okay, the internals weren't quite confirming buying the breakout. You could have been a little more aggressive, but the internals really weren't confirming that. But so what we did was we waited for this market to pull back into logical support. Okay, right in here, and scaled into the market right in here at 77 3/4 or 77 1/4 and 78 1/4. Okay, this was actually a 1-to-1, just above 1-to-1, and then or 2-to-1 right in here. As this market, we took off profits just ahead of this major key trading zone. Okay, and this actually we did not trade it. It was in the afternoon. This would have been a shorting opportunity right in here, just based on what was going on in the internals and everything. But we did not trade it. If you had, a 2-to-1 was easily hit to the downside on that. So that was another good day. And now on this day, this was actually a Fed day, back on April 30th. We actually took a loss for the day. The market was a little choppy in here. Internals were kind of mixed. And the market had actually taken out the prior day high, but the internals, like I said, they were more neutral. And when they indicate that, then you're a little more cautious. But what I was looking to do in here, this market had pulled back and traded back up into this minor key trading zone. So I was kind of looking at this as a potential breakdown, and was really ready to go either way with this. If we had taken this out to the upside, I would have been looking to get long on pretty much a breakout. Or if we took out the low of this blow-off bar, then I'd be looking to get short. So the market had taken out the low of that blow-off bar. So obviously, it appeared to me that prices were being, the prices that were rejected earlier were now taken out. So if it offered a good shorting opportunity. As you can see, the trade did not work out. We ended up getting stopped out just above this minor key trading zone. The thing with identifying these levels is it offers those low risk trading opportunities. Okay, you clearly, it pretty much clearly identifies to you where you need to place your stop. Okay, so we had a losing trade on that day. Did not trade during the FOMC, obviously. Okay, and then on this day, April 28th, another really nice day. Picked up $411. By noon, this market, it put in new highs, had pulled back into support to one of our minor key trading zones. You could have been a little aggressive in here, but obviously, internals really weren't confirming it. Right in here, we kind of got confirmation in the internals, so we went ahead and took long. It took a long trade right in here at 1867 and exited just for a quick one-to-one trade ahead of this minor key trading zone. Okay, for a quick 4 points there. And then as this market continued to pull back, internals were still leaning to the bull side, so we actually went long in here at 65 and a quarter. Okay, and the market just traded just broke down right through this trading zone, so we ended up getting stopped out. And the internals reversed, so at the same time, what we did was we stopped in reverse. So we bought one in here and then ended up selling two right there, stopping out of our long position and immediately entering a short position because the internals were confirming further downside movement. Okay, so as you can see, that trade worked out and pretty much made back what we had lost on that losing trade. Okay, as you can see, and one thing I want to point out, guys, look at this. This is important with the opening bell income strategy. This is typical. Okay, your average RIN is typically, well, it's always greater than your average loss. Otherwise, you're not, you're taking profits too soon. Okay, trading off these key trading zones, you need to go for that minimum 2-to-1 reward to risk. Okay, now back on April 24th, just another example. On this day, the market had opened up pretty much right at this major key trading zone. Okay, and now the prior day, this minor key trading zone between 67 3/4 and 69 3/4 pretty much held as support all day. So what I was doing was I was looking to scale in right in here and right in here, okay, with full intent to scale in again if the trade didn't work at this major key trading zone. Okay, as you can see, the trade did not work. The market continued to sell off right into this major key trading zone. So I stopped myself out and got right back in at this major key trading zone. With these major key trading zone, as what you're looking to do is these are longer term support and resistance, so the majority of the time you're looking to buy those automatically or sell those automatically. And as you can see, we made our profits back. We took off a portion of the trade up in here as this market started to move higher, and then it came back, almost stopped us out in here, but then continued this major key trading zone, major support, ended up holding, and this market ended up continuing to move higher, and we took off the second portion of the trade just ahead of this minor key trading zone. Once we got the gap fill, we took off the second portion of the trade. Okay, and then just continuing the rest of the day. If you continue to trade the rest of the day, again, here's a major key trading zone. This actually would have been a valid short. By late in the afternoon, around 2 o'clock, Todd talks about 2 o'clock being key time of day. This is a great buying opportunity if we're trading down off the high at 2 o'clock. Look at this. So guys, you can apply what you're learning in here to what you already learned from Todd. Key time of day, trading down off the high, expect a resumption of the trend. Okay, so you can use these key trade zones in conjunction with what you've already learned. All right, good trade on that. On this day, we ended up actually, pulling. It was a really good day, almost $1,000 day. We only traded 1, 2, 3, 4, really 5 contracts. This says 10 because it's it's 1 in, 1 out, so that's why it shows 10, but it's $900. It was 5 contracts, so it was a really good day. And again, look at this: your average win 229, average loss 117. So again, we're maintaining that 2-to-1 reward to risk. All right, now Todd, back to you.
All right, thank you, Craig, for that fantastic presentation. As you can all see, there's nothing magic about it when you know what to look for. In just a few minutes, you've already learned some key concepts that will help you to easily determine who's in control of the market during the trading day. So by now, we hope you're starting to see what's possible when you take advantage of the early morning volatility. If you're trading the E-minis and you're not trading this strategy, you're literally letting money slip through your fingers. Again, it's possible to make anywhere from $250 to $500 a day trading one contract, trading the opening bell income strategy. However, you do need to know how to trade it. We're not blindly trading off of these key zones. We're applying very specific intraday trading tactics and intraday trading strategies to determine how we trade off these key trade zones. If you've noticed, all of these recent trades are traded off of our key trade zones that we identified during our top-down approach analysis before the opening bell. Before the market opens, we're looking for very specific criteria to determine the big picture context of the market and to identify the key trade zones. After the market opens, we use market internals to determine who's in control of the market, and then we simply execute our trades at or near these key trade zones. And the coolest thing about this strategy is there's no second guessing, and you'll never have to ask yourself, what should I do next? You'll have a complete checklist by your side, and you'll see that everything is very simple and laid out for you. The opening bell income strategy is easy to learn, and because it follows a very precise formula after some instruction, some study on your own, and some practice drawing in the key trade zones, you'll be ready to put the strategy to the test next week. So if this sounds like something you're interested in learning more about, we encourage you to enroll today and receive immediate access to the live 4-hour recording of the online class, Q&A session, and recorded 2 days of live trading. Reserve your seat today and join Craig and I on Tuesday, July 8th and Wednesday, July 9th from 8:30 a.m. to 12:30 p.m. Eastern Standard Time, where you can look over our shoulders and watch us trade this strategy live. Just like the prior live trading sessions we did in the last live class, these live trading sessions will also be recorded and placed in the members area for you to review at your convenience. In the live online recorded class, we go over the 3-step process, all of the intraday trading tactics and intraday trading strategies, and recent trades with plenty of chart examples. You will learn how to easily determine the big picture context of the market so you're always trading on the right side. And you'll also learn how to easily identify the key trade zones so you're able to pinpoint high reward and low risk trading opportunities. We'll show you intraday trading tactics and trading strategies so you know whether or not to fade a key trade zone or enter on a breakthrough of a key trade zone. We'll also show you simple trade management strategies so you're not getting stopped out too early or too late. And then the best and most reliable methods for taking profits trading off these key trade zones. And then we'll show you how to use market internals to look under the hood and see whether the bulls or bears are controlling the market. It's the thing that separates really successful traders from the mediocre ones. We'll also show you what to look for in pre-market trading and how these clues often provide the roadmap of how the trading day will play out, and so much more. Once you enroll, we'll provide you with immediate access to the members area where you can watch the recording of the online class and download the PDF workbook. You'll also be sent the DVD in the mail. But you need to enroll today if you want access. And there's more. To ensure we've left no rock unturned, when you enroll today, as a special bonus, we will hold another 2-hour live Q&A session on Tuesday, July 8th at 7 p.m. Eastern Standard Time. So you can get all your questions answered live by us, okay? And this will also be recorded and archived for you. In the members area, in addition to what we've already mentioned, you will receive access to pre-market analysis and key trade zones that have been archived. This members area is also an online community where you can post your questions and communicate with us and or with other traders. And remember, the live real-time trading sessions on July 8th and July 9th will also be recorded and available to you if you cannot attend. As I told you earlier, This is a new trading strategy breakthrough that we haven't shared with anyone before now. So why do we wait? I made myself a promise back in 1994 that I wouldn't be like some trading educators that just put out products without putting their money where their mouth was. You see, when you look around, there's a reason why most trading education companies come and go. Because you could only be in business as long as I have if you deliver quality information that actually helps people become more successful. Craig and I were not about to tell anybody about this strategy until we thoroughly tested this in real-time market conditions, exhausted all possible scenarios, and perfected the process of doing it right for maximum profit. And right now, we can confidently tell you that there's never been a better time to trade it. We've tested it long enough to know this is a solid edge, and we can't wait to share it with you. This class is perfect for beginners, since this is a strategy that's very easy to understand and execute. This class is also perfect for advanced traders, since you can use this strategy in addition to your current trading strategies. You could even improve your performance by just adding a few tweaks from this strategy to your own trading approach. This class is also perfect for traders with small accounts, okay? Since it is a systematic approach to achieving consistent results. Perfect for growing an account. So, if you want to make more money and take advantage of early morning volatility, especially during the first 90 minutes of the trading day, I encourage you to reserve your seat today and join Craig and I for 2 days of live trading July 8th and July 9th. Remember, with the opening bell income strategy, you don't have to sit behind your computer all day. On average, you may place 1 to 2 trades before noon. Before the market opens, you've got to do your pre-market analysis. We're going to go through this with you live on Tuesday and Wednesday before the market opens. After the opening bell, we'll show you how to use market internals to determine who's in control of the market, and then we'll simply execute our trades off these key trade zones based on the intraday trading tactics and intraday trading strategies you'll learn in the recording of the live online class. In the last couple of months, if you had only traded 1 contract per entry using this strategy, you still would have netted out a profit of $7,813. That's how powerful the opening bell income strategy is. You'll get our entire trading strategy A to Z. We're not hiding a thing. And while we're together during the 2 days of live trading, you can ask us any question you want. And of course, we'll answer all of them for you. It's important to us that you fully understand how to trade this strategy successfully. Get immediate access to all recordings in the members area so you can prepare yourself to join us on Tuesday, July 8th and Wednesday, July 9th for 2 days of live trading. Simply click the button right below this video to reserve your seat today. Don't forget, we're also sending you a DVD of the 4-hour live strategy class within a week, so you can watch the class over and over again in the comfort of your own home. You will also have immediate access to the members area where you have everything you need to know to trade this strategy successfully so you can put it to the test when you join us during the 2 days of live trading. Being one of the first with this strategy, you'll have a trading advantage that only a few have. After you reserve your recording of the live strategy class in 2 days of live trading, we will send you an email with detailed instructions on how to access everything. We have limited seats in our live 2-day trading sessions, so if you're interested and would like to learn more, simply click the button below to reserve your seat today. Thank you for listening, and we look forward to seeing you on Tuesday and Wednesday, July 8th and 9th.